Timing's perfect. Great. London's police are just going past the window. But anyway, good afternoon, everybody. It's Neil Jenkinson here. I'm the, as you know, regional manager for BIBA in the North. I welcome you today to today's webinar with our friends at CMR. I've got James and Chris with me. They're going to take you through the presentation. I really find this interesting. It's more and more prevalent week in, week out. So I'm going to pass you over to the guys. Usual technology issues, guys, so we will keep you on mute. Any questions, please ask through the Q&A or the chat boxes. Obviously, at the very end, we will release the mute button just to see if anybody's got any further questions, but for now, I'm going to pass you over to the boys, and hopefully you'll enjoy this presentation. Cheers, lads. Thank you.
Thank you, Neil, and thank you all for joining us this morning, or this afternoon now, for this presentation, which will look to demystify trade credit insurance. I'm joined by James Early, who's an experienced account manager here at CMR, and he'll be taking you through the second half of this presentation, going through the nuts and bolts of how a policy actually operates. I'll then come back at the end just to go through a summary of the presentation. Okay, there's nice little curtains fling across towards, yes, very nice, to an agenda.
Well done.
The coffee and pen. First of all, I'll give you a background to CMR, who we are. I'm going to spend a little time on that. Go through the learning objectives, what you'll get from today's presentation, and we'll also then look at some of the large losses that there were in 2008, just a reminder of who went under in 2018 rather, and then I'll spend some time going through the definition of trade credit insurance. We'll also look at the importance of trade credit insurance, particularly for your clients and the SME sector that we specialise in. We'll look at all the uncertainties that are around at the moment for anybody who's in business, and then I'll hand over to James, who will go through how the trade credit insurance policy works in practice and all the different types of policies that are available. Finally, I'll then come back and go through a summary and also introduce you to the BIBA relationship managers. So, CMR Insurance Services, we're just entering shortly our 30th year in business, started in 1990, and we've been working with Atradius in its current form for all that period. So we're an appointed representative of Atradius. The major thing here is that we only supply trade credit insurance. We're not a general broker of any type, so there's no concerns about introducing your clients to us, because all we can provide is trade credit insurance. TCI is a commercial lines business-to-business trade credit, and this year, also last year, we were appointed the scheme provider to BIBA, and we've had a very successful first year, attracting new BIBA brokers and, in turn, new clients of those BIBA brokers. So, from today, by the end of this session, you'll have a greater understanding of trade credit insurance. You'll understand the benefits to your clients and also to yourselves of selling trade credit insurance, and the importance of it, particularly in these uncertain times that there are at the moment. It's a very, very volatile market out there. So we do look at the companies that went bust in 2018. Carillion is the most high profile, and it was on the news for a number of weeks at the beginning of last year. We covered that in detail in a previous webinar last year, so if you want to pick up on that and what was the demise of that company, please do. Players Accessories, just names to remind us of a lot of these high street names that went under last year. House of Fraser went into liquidation. They may be trading again, but they actually, unfortunately, failed to pay their suppliers. And Patisserie Valerie, that is the beginning of this year. So there are plenty of other companies that went under, not only here in the UK, but worldwide. And the insurance policy, trade credit insurance policy, covers exports as well as UK risks. And it covers orders as well as sales that are being made. So with orders, you could imagine, I think the best example is Monarch Airlines, who, if you're a supplier to Monarch Airlines supplying the uniforms and it had Monarch's logo on it, if they went bust before you were able to supply them, before you got paid, those goods would be worthless to you. You wouldn't be able to sort of sell them onto EasyJet with Monarch Airlines on them. So it covers that, and James will go through that aspect of the policy as well in more detail. A few facts and figures which are interesting from last year. As it says there, insolvencies were up over 10% on the previous year. That equates to 44 companies going under a day. And I'm sure that you would find that your clients would have suffered a bad debt or certainly slow payments last year. The other thing that is interesting, that 37% of businesses have been victim of fraud. Now that's, I know, supplied by another scheme provider, and it'd be interesting to look up on the BIBA website for that type of insurance as well. But it's an interesting fact that came from CreditSafe, providing this information.
Amazing.
Yeah. And you see there, a fair percentage of companies see the problems that they're going to face this year are to do with this economy and the uncertainties that are around. So I thought we'd just quickly look at what trade credit insurance is at a high level. Just looking here between a policyholder, a business, and its customers, and the normal sort of transaction that would happen, an order would be placed by a customer. They would then supply those goods or services, and all being well, payment will be paid on due date. But we know that's not always the case. So if we look what happens when a trade credit insurance policy is in place, a third party is introduced into this transaction. So Atradius are sitting up there as the insurer. We represent Atradius. So the same transaction happens, but there's now a contract between ourselves and the policyholder. There's a credit insurance policy in place. So again, the order is made. The company will contact us. We will then analyze the financial strength of that company and the creditworthiness, and then suggest, yes, a credit limit of whatever that might be to cover that order. The goods are then delivered in the usual manner, and this time, unfortunately, your customer or your client's customer goes bust. At which point, a claim is then submitted, and the claim will, after investigation, is paid out. So that's in very simple terms how trade credit insurance policy will work. So one of the difficulties, I think, is people understanding what trade credit insurance is, the terminology of it, and it's got so many different names in the market. I'll throw a few up here. Bad debt protection is usually used by financiers, by banks, because they can't use the term insurance. They're not an insurance provider. But sitting behind that often is a trade credit insurance policy provided to the bank, but they sell it out as trade debt protection or sales invoices protection. I was watching Martin Lewis's Money program the other night, and the term credit insurance appeared on that. And that was in context of the name used by aliases by companies contacting people regarding the missold PPI that we hear about day in, day out. Wow. So it's used in the consumer field as well. So that's why we try to refer to it and get everybody to speak as trade credit insurance so people understand what it's all about. A nice little umbrella showing how it's protecting you.
Very good at that, mate. Very good. Really skilled.
So in its simplest form, the protection is there to cover you when your client's customers don't pay. It's fairly straightforward. But there are a number of hidden benefits to trade credit insurance. It obviously helps the profitability of a company, that each year they can budget for an insurance product and not have a fallow year where they have huge debt which hits them and could actually knock them out. So that's an important part. I also like to sort of talk about an entrepreneur, the peace of mind of a businessman who's set up his business, a small business, and he's grown that business, and he's now got salesmen working for him. In the past, he knew all his customers, he knew the whites of their eyes, he could tell whether they're good people to deal with. As that business grows, that becomes more distant. Whereas if he then has a credit insurance policy, trade credit insurance policy in place, he can get that vetted and know that each one of the customers that he's dealing with are protected, and that can take the stress out of the business. If the trade credit insurer won't approve a limit, then we're getting to the point where those ones, which will be few and far between, can be referred to the owner, and he can make that decision in the knowledge that the trade credit insurer won't insure it, but he could still take the risk himself. But at least he knows that risk he is taking. Other benefits: it enables companies to expand their business, knowing that their clients or their customers are fully secured. The information that is available to insurers on your clients' customers is second to none. They are getting business and information which is bang up to date, rather than relying on company house reports, which by their very nature are overdue by the time the information is old, by the time it's published. Lots of customers now provide their management accounts to the trade credit insurer to keep them abreast of what's going on, so they can keep their credit lines open. We also see it as a tool to work with a company's existing credit control team that controls procedures, and to improve people's outstanding days of payment. It also improves the access for people to want to get finance. So when an SME goes to the banks or to a financier, and they've got a trade credit insurance policy in place, it really helps them to secure that funding. The great thing with a trade credit insurance policy, as I say, it improves access to finance, and the great thing with a credit insurance policy, a trade credit insurance policy, is that it's portable, that you don't have to be tied to one bank with that. So if a customer changes their finance arrangements, they can keep the policy in place and move it to another financier. Okay, I mentioned at the beginning about uncertainty. It was about 4 hours ago. I don't want to dwell too much on Brexit. I mean, everything that's going on this week, it just makes it so uncertain for everybody how that's going to come out. We've got the USA isolationist policies out at the moment. We've got a trade war looming between US and China. I think that's been put back. They were meant to resolve it by the end of this month. I think it's going to be put back again. The general economic outlook is tough for everybody. And we know about the car industry, but there are a number of company failures already this year. A few examples: Better Bathrooms, 335 employees have lost their jobs. LK Bennett, I think, was only last week, and they're intending to go into administration. And one of the oldest, I think it's the oldest department store in the world, from Derby, Bennett's Department Store, 1734. They again are unfortunately going out of business. We've also heard a number of companies that are in trouble. You hear about Debenhams and their issues, and Interserve, which I think is today the decision day whether they are going to have to go into administration or whether the package that they've put forward will be accepted. And then overseas, GoPro and Fitbit are companies that there's forecasts that they may not survive the year. These are all rumours, but they're in the press a lot, and we all know the very difficult trading conditions that are out there on the high street. So it's not a happy picture for everybody out there, but that's why the importance of trade credit insurance. I'll now bow out for a couple of minutes. James will take you through the workings of a policy and the fundamentals of how it works. So I'll hand over to James.
Thanks, Chris. My name's James. I'm an account manager at CMR. I deal with new business and clients' policies on an ongoing basis. I'll take you through some of the key points of cover, how a policy is priced, and the information that we require. We have on our website a quick quote page. You can fill in the details on there for a client to get a quote from us, or we can also provide you with a one-page short version proposal, and that gives us all the information that we need to give you an exact price for the client. Things that we look at are the trade sector, that's the trade sector they're in, but also the trade sector they're selling into, which is more important for us. Their bad debt history, have they had claims or debts in the past, which is a sign of their credit control and the spread of risk that they provide. We look at the turnover. Obviously, that's an impact on price. The higher the turnover, generally the more expensive the policy, but at the same time, higher turnover policies have a lower underlying cost of premium. As with anything, it's economies of scale. The policy can cover export only, domestic only, or their combined whole turnover business. And we look at the number of customers that they're selling to. That all goes into our pricing equation, and we come out with a fixed price for the policy for the year. I'll take you through very quickly an example of a policy. So a company that's a food wholesaler, they'll be selling into retail and hotels, restaurants, that type of business. In this case, they've got no debts in the past, so good, clean business. Turnover of up to £1 million, and they're trading in the UK only, domestic only cover, with approximately 25 customers. So that would all go into our pricing model, and we'd come out on a case with those parameters, typically an annual premium of £3,500. That's a fixed price for the year, includes credit limit charges, and it includes insurance premium tax, and they can pay the premium by instalments by direct debit. So that's very much a bread and butter type of case for us, or in this case, it actually is a bread and butter case. Sorry, bad joke.
It will take anything today, James. Don't worry the way this has gone. You go for it, mate. Love it.
Looking at the process for a client to actually go ahead with policy, so as we said, we get the initial information, look at the type of policy that's best for them. We provide you with the indication of terms, discuss that with the customer. The next stage would be to look at their credit limits. Obviously, it's a big part of the policy, so we'll do a review of their top 10 customers usually and provide limit indications on those. We meet with the clients to explain the policy to them. We always see them at the start of the policy to explain all the procedures and sign the documents, but we're also very happy to go out with you to see a client if they just want to discuss it before making a final decision.
So you'll accompany the broker there and
absolutely. We'll go with the broker and have just a general chat about the business and how we can help them. Finally, if they go ahead, we go back in with the documents, train them on the policy procedures, and sign the relevant forms, and they're up and running. We give them a dedicated point of contact at CMR, so somebody who will deal with them day to day and gets to know them and their business. Moving on to credit limits and underwriting, just to cover some of the key points on this. Obviously, credit limits are a key part of the policy. They need to establish a credit limit on each customer that they're trading with. Up to typically £10,000, they can set a discretionary limit themselves, and they do that by using their previous trading history if it's an existing customer, or for new customers, they can look at a credit report and use the credit rating from that report to set a limit up to £10,000. Above 10,000, or where they can't set discretion, they would apply through our online system for a credit limit that's underwritten by the tradius. The tradius, when they're underwriting the credit limits will look at information that's on company's house. Quite importantly, they get information from other policyholders, which is a good benefit of credit insurance. An example of that is a client I was speaking to a while back who were looking at taking out cover. They came back to me to say that they had a new contract, a large new contract from a customer they'd been chasing for some time and wanted to take out the policy specifically to cover that contract. When I spoke to the underwriters to get the credit limit on them, we found out that actually that company had defaulted on quite a number of other suppliers, weren't paying their bills, and were just desperate for a new supplier. And that's information that they wouldn't get from other sources. Credit reference agencies, the underwriters will look at agency reports from other territories and also information directly from the buyers. So they'll speak to a lot of larger companies regularly, get financial updates and insight into their business. So there's quite a lot of valuable information that a policyholder can tap into.
James, I've just got a question from the floor from a gentleman called Nigel West. He's got two questions. First one being, what's the difference between TCI and invoice factoring?
TCI stands for, I think anyway, it's Trade Credit Insurance. Okay. So that's exactly what we're talking about today.
Yep.
Invoice factoring is linked with credit insurance a lot of the time, but essentially that's providing the finance to the business against their invoices.
Thank you.
And credit insurance is supporting them if something goes wrong, if the company goes bust, then the policy obviously kicks in and pays them instead of the debtor.
Super.
And it just follows on from the point I was making that the trade credit insurance policy is portable.
Yes.
Whereas the finance is linked to a finance company.
I've got you.
And if they want to move to another finance company, they can move the trade credit insurance policy through ourselves separately, whereas they're combined usually with a factoring company.
Okay. And Nigel's next question, and maybe you might want to take this offline with Nigel, I don't know, but he says, what are the procedures once a policy is in place?
This is the point that
we'll be going on to...
Right, there you go, mate. We're going on to that in a second, Nigel. So thank you for those questions. And anybody else, guys, please ask away in the chat box. That's great. Thank you.
Thank you.
Thanks, James.
Looking at claims, obviously it's a key reason why the policy is the need to perhaps make a claim if something goes wrong. We'll look at a typical claim scenario, in this case for an insolvency. So a company goes under and they get notification of insolvency. We would ask them to report the debt to us at that time. We ask them for copies of invoices, orders, proof of delivery if it's goods that have been delivered. We'd check the credit limit. If they've set a discretionary limit, we'd check the information they've used to make sure that's in order. And then the next stage with an insolvency would be getting confirmation of the debt from the insolvency practitioner.
Just one quick question. Sorry, James. Yep. Sorry to interrupt. Richard, I'm sorry, mate. I did miss the question. I apologise. It was probably through when we were having our little technical issues. Richard Brown had a question, which was insurer had tooled up and hired staff for a big order, started production. His question's coming in now a little bit. Started production, but not yet delivered or invoiced, and the customer goes bust. So what will the insurers pay?
That would come under work in progress or pre-credit risk cover. Sort of cover Chris mentioned the Monarch situation.
Yep.
So we can attach that type of cover to the policy, and it covers them exactly for that scenario where a company goes bust before they've dispatched or delivered the goods.
Okay, thank you. Another one, if you don't mind me. I've got another one come through from Keith Campbell. Are there any trades that are specifically excluded in terms of the policyholder, or will you look at all trades and industries?
Yep, as long as it's business-to-business transactions. The only exception would be long-term hire type contracts, which are outside the terms of the policy, but otherwise, yes, any business can be considered.
Okay. Happy with that?
Lovely. Yep.
Guys, is that okay? Hopefully that's tick those. Perfect. There we go. Super. Okay. Please carry on. Sorry, James. Thank you.
No problem. So going back to the claim scenario, in this insolvency situation, we've had confirmation of the debt from the insolvency practitioner. We will then do a pre-claims assessment. So we'll look at the claim as we were a claims examiner, make sure it's all in order, all the documents are present and correct, because most people find with claims, especially with credit insurance, they're rejected usually just because of a missing document, missing invoice, delivery note, something like that.
Okay.
So we'll make sure it's all in order before submitting it. It says claim forms there. The good news is there isn't a claim form.
Right.
We just get the documents from the client, and they don't have to worry about filling in any form.
You're there to help all the time, whenever anything happens.
Absolutely.
Perfect.
Yeah. Perfect. We put the claim together, submit that to the underwriter after doing the checks, and that will hopefully result in a speedy claim payment for them. Policy types. There's a few different variations on the policy. The core product is whole turnover. When we say whole turnover, we mean insurable turnover. So, as we touched on, that can be just UK or export or both. We have what's called a variable policy, which is more tailored for larger companies, turnover of typically above 10 million, or a sort of business that finds it very difficult year on year to estimate turnover just because of the nature of their business.
Yes. Yeah.
With a variable policy, the difference is that they make a monthly declaration to us of their sales, and we charge the premium according to that level of sales each month.
Standard.
The key product is our fixed price policy. That's based on an estimated annual turnover. We work out the price as I've shown you in the previous example, and that price is fixed for the year. If they need to make changes to the policy, if the business changes or grows significantly, then we can adjust the policy and make an adjustment in premium accordingly. We offer multi-currency policies. The policyholder can invoice in pretty much any currency in the world. There's a few exceptions like the ruble, but any invoices they can invoice in the customer's local currency, and that's converted back at the claim stage to a claim payment. Just reiterating, it's combined turnover, export only or UK only. We also have a new policy called Pro Credit. It's essentially the same as our fixed price whole turnover product, but it's geared towards smaller SME businesses, perhaps companies with some bad debt history. It gives a different option to offer to the client. It's a little bit more restricted because it covers UK and OECD export countries only. But for certain business, it's the right fit, so we'll offer you that instead. We can also do single risks. We get quite a lot of inquiries about single risk, but it's really meant for larger one-off contracts or business that's out of the ordinary scale of the business for that client.
Understand.
It's quite expensive compared to the whole turnover policy. Minimum premium on a single risk will be coming out something in the region of £5,000. So you can see from that the type of contract that it would be viable for. We say single risk, but we can actually cover up to 4 customers under a single risk.
Right, okay, got you.
I think he said 4. Yeah.
And each policy is tailored to the customer's own needs and requirements. Looking at policy structure, which will hopefully answer the question that we had.
Thank you.
The policies are 12-month fixed period. It's a fixed price policy if they take that option. It covers insolvency, protracted default, which is essentially non-payment where the company is still trading but they've had cash flow problems, something like that, and they can't pay. And also political risks on export business. Policy will cover goods or services or both. Some companies do both. So as we said, as long as it's business to business and there's an underlying transaction, then it's insured for business.
Great.
Work in progress, that again goes back to your question.
Sure.
We call it pre-credit risk in the policy, but it's also termed work in progress. And that will cover somebody before they've dispatched goods for goods that they're making which are bespoke to that customer usually.
Right.
They don't have to be, but if it's not bespoke goods, then presumably the client could sell those to another customer and wouldn't need the cover for them. Policy offers 90% indemnity against insolvency and default, and it's subject to a deductible or like an excess of typically £500. So in the event of a claim, the insured would lose 10% uninsured or the £500 deductible, whichever is greater.
Okay.
On the policy, there will be a maximum extension period. It's typically 45 days from due date of an invoice. So when the customer invoices a client, they have their credit terms. At the end of those credit terms, they have 45 days to collect the payment themselves. And if at the end of that 45 days they still haven't been paid, they would report the debt to CMR and we would start the collection and claims process from there. Maximum terms of payment will be stipulated in the policy, and that's dependent on what the client requires for their terms of trade. Maximum liability on the policy will be a cap on total claims payable in the year for the premium that the client's paid. Also, a maximum credit limit amount, again, dependent on what the client needs, and that will be stipulated on the policy. And their discretionary limit, which, as I say, is typically £10,000.
Yep.
That concludes my section of the presentation.
Thanks, James. Nigel, does that cover off your question, mate, from earlier? Just whilst we're obviously on the subject, does that kind of give you a clue? If that's all right, obviously I'll certainly get the boys in touch anyway. But as James has just kindly taken you through that, I just want to make sure that's comfort for you for now. We'll come back to us in a second.
Yep.
James, thank you for that.
Thanks a lot, James.
Back to you, mate.
Very thorough explanation of the policies, so hopefully people, as you say, have answered all their questions.
Yeah.
But very happy to come out and meet people, and that's what we've got here. We've got two guys. As I say, we started this relationship with BIBA last year. Nigel and Phil have joined us subsequently. Nigel has a wealth of experience in the finance industry and uses credit insurance from that side as a provider of insurance under what we're saying, bad debt protection. Phil has over 20 years experience working directly in the trade credit insurance industry. We split the country between the two of them, but over and above there are another...
It doesn't look like a split though, man. Is that sort of what's the gap? Is that kind of where it is? Or Phil, goodness me, he's got some miles on the clock there.
But there are another 3 or 4 people who can come out as well.
Great.
The idea is that these guys will come to the BIBA brokers' premises and do face-to-face meetings with them. And
I just have to reiterate what Chris is saying there, guys. Listen, as a sales team, there's obviously, as you well know, there's 4 of us at BIBA, and we're also happy to introduce and facilitate meetings between you guys. So, you know, that any time at all, please shout. Please shout. There's another question coming. Okay, just bear with me. Oh, sorry, guys, I was chatting away and I haven't caught up with these questions. Right, there's a question here. Could this policy be taken out by an accountant, for example, that was concerned about clients going bust whilst fees by their clients are still outstanding?
Yeah, absolutely.
Yeah?
We're still providing a service, so that's no problem.
Okay, super, thank you. There's another one after that. I hope that covers that off. Ryan, thank you for that. Nigel was asking more. He was thinking more about how the client handles their sales. Do the underwriters have to underwrite each supplier purchaser before the client does business with them? Or was that obviously part of your presentation there was about the future business limit?
Yeah, they would apply for the credit limit as soon as they know they're likely to do business with that customer. As they could set the discretionary limit themselves or apply to us for the limit. Once they've got that approval from us, they know they're good to go ahead and trade with that customer up to that level of business.
And if there was business that came on board mid-term, they can then look at increasing the limits and stuff like that?
Absolutely. Okay. The limit can be increased at any time, obviously if it's creditworthy for that amount of cover. And a lot of companies do use it as a sales tool because it helps drive the sales knowing that they can get cover on new customers.
Thank you, mate. That's very kind. So if a credit, one of the last one, hopefully, Nigel, that helps. Stephen Finn has just asked a question. If a credit insurance policy has paid claims in the policy period, are the renewal terms affected given the insurer has given the green light to transact business with their customer?
Like any policy, obviously, if there are claims, then it might affect premium for the coming year, but it's very much case by case. It depends what the situation around the claim was and the value of the claim. So, yeah, it likely will have an impact.
Yeah, with any insurance policy, I guess there's always a review, isn't there? I hope that's okay, Stephen. And one last one. I don't know whether they don't want you talking again.
Yeah.
David Weeks has just asked, there's a minimum premium I think you mentioned, and size of business that you would transact with.
Well, yeah, the minimum premium is roughly the 3,500 that James showed on that example. And then the sky's the limit about how big the policies go.
Okay.
We look, I'd say about 90% of our business are SMEs, companies turning up to about £15 million in turnover. We do have larger single risk policies as well.
And then your pro credit, I've got a shocking memory, but your pro credit is a smaller part of the business?
Below that level, yeah.
So that then probably covers off the minimum size business as well for David's question, doesn't it?
Yeah, exactly.
I hope that's okay, David. Does that make sense for you? Can you just give me a quick little note to say, yeah, that's good? Thank you, pal.
I'll carry on.
Off you go, Christian. It's back to you, mate.
Okay, just to run through the benefits to yourselves, to the members out there. We provide everybody with marketing material. So you can see on the screen there a leaflet that you can have your logo put on as well, and you can have that electronically or in hard copy. So we can sort of try and drum up some information and interest from your clients.
We're asking, is marketing material digital?
We can do that, yes, either or, yeah.
Super, thank you.
Yep. We then go out and meet you and meet all the brokers who are interested. We do a presentation, we've done several this past year, where we go into your offices, your team, and explain what credit insurance is about. I mean, we're obviously going through this presentation here today, but go into more depth and how it would affect your own customers. We then, when we go and see clients, as James said, just emphasise that we do client training. So none of this is done remotely. We actually visit every single client that we have. We meet. If that client has new employees during the year, somebody's left, the credit controller who we normally train, then we would go out again and do some retraining. It's important for us that this works for all parties concerned.
Sorry, Chris, it's just a question again from Richard. He's asked which Atradius company is underwriting.
Atradius UK is based in Cardiff, who we all our dealings with on a day-to-day basis.
Okay.
Atradius are eventually Atradius CYC in Spain, but Atradius UK that we actually deal with day-to-day.
I did say to Richard you would get the boys. I'll get the boys in touch with him. So we'll touch base with Richard down the line with that.
Sure.
Thank you.
Yes, so just saying that ongoing support that we do give to the clients. The point made earlier on, businesses, all our businesses are changing every day. This is a sort of a living, breathing policy, unlike lots of other insurance policies where people take it out and don't have to look at it again for the rest of the year. With this policy, your clients are getting new customers, so they're applying to us for new limits. So there's a lot of transaction, a lot of going backwards and forwards to clients and ongoing support throughout. As I just re-emphasised that point, that we only provide trade credit insurance, so there's no conflict of interest at all with us. One of the other things that we pride ourselves on is speed of response. We need, in general, a very few bits of information to give you a ballpark figure of how much a trade credit insurance policy is worth. That can be given over the phone. James went through the general sort of information that we need, or there's a simple online quotation form. We would hope to try and get that back to you, if it's fairly straightforward, within the same day or 48 hours, depending on what sort of information. If we need more information, we'll pick up the phone to you and run through the proposal that you put to us. We also have the access to the ability to get credit limits for customers. So I think James sort of said we would look at, the first dozen customers, people that your clients' customers, where your clients are concerned that these, 3 or 4 are the ones that they want to make sure they could get insured first before even bothering to get a price for it. So we have that ability to do that. We also go into the commission rates. As I said, mentioned, the minimum premiums are about 3,500, but they can be up to tens of thousands of pounds. We pay 10% of the total premium that's paid in the first year, and 5% for every subsequent renewal. And over and above that, once that first payment, clients pay us in various forms, from quarterly in advance to annual in advance to monthly. When that first payment is received, we will pay the commission for the whole year to you. So it's not paid as and when on month-by-month basis.
Right.
Before I go any further, just a couple of BIBA members who have been using us over this last year. I'll leave you to read that yourselves, but Paul Farron from Gill Noble has sort of said there about demystifying credit insurance, and that's our expertise.
Mm-hmm. Jason's just asked the question, why would you reduce commission new business to renewal?
It's to incentivize people to, it's a lot higher commission than they would get from any other source, not being a specialist broker.
Right.
And, the incentive is to introduce business, and we give the 10% for the first year and then 5% thereafter.
Okay.
But 5% of the total premium.
Okay. Jason, we'll get the boys in touch and have a chat about that. Yeah, no problem.
Thank you. So just in summary, as it says there, trade credit insurance is insuring you against, or insuring your clients against, what is often their largest asset, their debtors. It's covering the bad debts that any company may incur, and therefore takes away the fright that they may go bust themselves and disabilise their own business. And then we also see it as an aid to help good businesses grow, and particularly at this time when there's so many things going on around the world and that they've got no control over. Being able to control your debtors and know that if somebody does go bust, if your telephone line breaks in the middle of a presentation or whatever might go down, that you will get paid out. Our helpline number is there, our sales line, if you want to contact us there. We also have LinkedIn, Twitter, and our Facebook page. So thank you all very much for listening to today's presentation.
And the conference?
Yes, we're at the conference. I've forgotten the stand number, but we're
in the building, guys.
We are there. We'd love to see anybody who wants to come along and discuss any of this with us.
Super. Thank you.
Thank you very much.
Thank you. Guys, listen, we're probably going to do a little high five here in the office just for getting through that, because that was the first time that's happened to me, which is a shock to me. So I'm going to unmute you all. I'm going to give the boys a round of applause, and if you don't mind, just give them a quick hand, because I thought that was super. Well done, boys. Thank you.
A hand of applause for fucking something up.
Thank you. Thank you for that, because you're now live on Channel 4, so thanks very much for letting us know those thoughts. The phone lines are unmuted now, whoever that was. So any questions, any further questions for the guys? Great. Any other questions, guys? No. Median's gone as well. Great. So, thank you for your business, thank you for listening, thank you for your patience. Obviously we'll continue to work hard with our technology at this end, but the boys will be in touch, and obviously we'll take everything away with us. But thank you, and have a wonderful day. Have a great weekend. Take care, guys. Thank you.
Thank you.
Thank you.